Hey there, I'm just going to run through my fourth and final video on the 2026 federal budget. And this one is a couple of things that I've pulled together. The first, I do want to cover off on the impact on trusts, the $20,000 immediate write-off, and the FBT changes for electric vehicles. Firstly, for trusts. From the 1st of July 2028, the government is proposing a flat 30% tax to be imposed on the taxable income for discretionary trusts, often called family trusts. And while it's something that I have been saying is very likely to happen for some time, this is a very commonly used vehicle for small businesses, family investments, and family groups generally. These are people who are trying to effectively structure things to protect assets and also stream income, and this is where the ATO is coming from, and they have been on about this for some time. It is important to note that, similar to the imputation credit system, the tax credits paid by the trust will be claimable by the beneficiary. They are non-refundable credits, it's important to note. What this does mean, though, is that for some small businesses in particular, they might need to consider restructuring out of trust, and there is some rollover relief available. But it's very important to move fairly promptly and not leave this till the last minute. Get some advice well before the time this all takes effect. Now, for businesses, the $20,000 instant asset write-off has been extended indefinitely, and this is a really good outcome here. It means that small businesses under $10 million turnover will be able to immediately deduct assets costing less than $20,000. It gives small business owners a bit more certainty, and that's what we do need as small businesses. That certainty is very important. The third thing that I just want to run through here is around FBT and electric vehicles. The current very generous FBT concessions are being wound back. The full exemption does continue for a while, but as of 1 April 2027, the start of the 28 FBT year, the rules do start tightening. From the 1st of April 2029, the proposal is basically a 25% permanent discount on those eligible electric vehicles for FBT purposes, and again, as long as they are under the fuel efficient luxury car tax limit. So if you're looking at purchasing an electric vehicle through your business, don't just assume that those old generous rules will apply. Timing will matter. Existing arrangements are likely to be protected. However, new decisions need to be considered carefully. I guess the practical takeaway is this. If you have a trust, it's worth reviewing over the next period of time. If you do run a small business, that $20,000 immediate write-off and the permanency of that is very useful. And if you're looking to acquire an electric vehicle through your business, these rules are changing, and it's worthwhile considering timing, costing, etc. The headline, I suppose, is one thing, and the practical application is always another, and this is where good advice becomes really important. I'm TC. That's my 2 cents.